Hey guys, welcome back. So, Kevin O'Leary is best known for being one of the sharks on the hit TV show Shark Tank. He's also well known for being blunt, straight to the point, and it should come to no one's surprise that Kevin O'Leary loves money. Having analysed hundreds of businesses on Shark Tank, as well as building and selling some of his own businesses, it's fair to say that Kevin O'Leary knows a lot about business and also a lot about investing. So in this video, I'm going to share the investment portfolio of his company, Oshares Investment Advisers. If you didn't know, the great thing for us smaller investors is that any company in the US with assets of 100 million or more must declare what they're buying and selling. And this is how I'm able to share with you exactly what Kevin O'Leary is doing with his own money. Just bear in mind that this is his stock portfolio, so any cash positions or bonds or gold won't be in there, so just bear that in mind. I'm also going to share with you his specific investment philosophy. So we'll go through his 3 investing rules, and he uses these rules when he builds his portfolio. So, lots of good stuff to cover. As always, if you do find anything in this video useful, be sure to drop a like. That would be much appreciated. Okay, sit back and relax, guys. Here is the investment portfolio of Mr. Wonderful himself, Kevin O'Leary. Okay, so here is what we've got coming up. We're first going to take a look and do a snapshot of who is Kevin O'Leary. We'll then take a look and I'll hand you over to Mr. Wonderful himself as he explains his investment philosophy and also his 3 investing rules. We'll then take a look at the Kevin O'Leary portfolio itself. We'll break it down and see what insights we can take away from it. And then just for fun, we'll finish with Kevin's most savage moments on Shark Tank. Who is Kevin O'Leary? So he's Canadian born in 1954. So at the time of recording this, he's 66 years old. His net worth is around 400 million, so doing pretty good. A fun fact is that he originally studied environmental studies and psychology before going into business. He co-founded SoftKey, which was a software company, in 1986. Now, this was one of his most successful businesses, and it acquired lots of different companies along the way. One of those was the Learning Company, which the whole thing then rebranded to the Learning Company, and this was acquired by Mattel for $4.2 billion. And it was this acquisition that made Kevin O'Leary a multi-millionaire. So let me hand you over to Mr. Wonderful himself as he discusses his investment philosophy.
Hi, I'm Kevin O'Leary. You might know me as Mr. Wonderful on Shark Tank, and I really enjoy doing that show because I love to support entrepreneurs. But my real job is I'm an investor. I'm entrusted with a lot of capital, both my own and other people's, and I have to put it to work. Now, I learned something a long time ago from my mother. You're going to find this fascinating. When I was a 7-year-old boy, and she was working at that time, she used to take me with the bank to her every Thursday. That's when they paid the girls where she worked. And she'd take 1/3 of her paycheck and put it into bonds and dividend-paying stocks. She used to say to my brother and I then, boys, never spend the principal, only the interest. After she passed away, I became the executive for her estate. And for the first time, I saw a secret account she kept from both of her husbands her whole life, made up of dividend-paying large-cap stocks and corporate credit. Do you have any idea of the performance of that portfolio? She blew away every indice. I was amazed. And she wasn't a portfolio manager. She was just a concerned mother that needed to have capital no matter what happened. I started to do some research. You may find this fascinating. Over the last 40 years, over 70% of the market's returns have come from dividends, not capital appreciation. She must have intuitively felt that and knew that. That forever changed my investment philosophy. I'm a dividend guy. I only buy stocks that pay dividends. I'll never buy a stock that doesn't return capital because the data tells you not to. Unless you're a masterful stock picker and you know exactly when to buy and sell, you can't, in my view, beat those odds. 40 years, 71% returns, that's it for me, dividends only. Now, I have some very simple rules that I have to live by as an investor. I'll explain them to you. And I have these rules in place for myself because they've saved my rear end over many volatile years in the markets. Number 1, I never own more than 5% in any one name. In other words, I don't want my portfolio to have a lot of concentration. Number 2, I never own more than 20% in any one sector of the S&P. I want diversification, there's no question about that, but also sectoral diversification. Number 3, I hate volatility. So I want at least a means test on the market cap size of the company. Generally, larger cap companies are a little less volatile, but above all, dividend payers are less volatile. So I try to build portfolios that have less volatility, because when you're a fiduciary for your own family's capital, preservation is number 1 on the hit parade. I think you know that. But here's what I've learned that's most important to me. I've been around a long time. I want some kind of means test on the balance sheet to know that the dividends are being generated by increased cash flow. I don't want any foolhardiness in going into which stocks to pick. For example, you remember that whole idea of accrued sales at WorldCom? I don't want that. I want cash flow. I want to test the company's ability to generate more cash to increase dividends. So I'd like a series of proprietary tests put on the balance sheets of these companies on an ongoing basis. FTSE Russell listened to me and they went to work. And that's how Oshares was born.
So let's break it down, the Kevin O'Leary portfolio. And here it is in all its glory. Now at first sight, you'd have to agree that this looks like a complicated portfolio. In fact, I've done quite a lot of different portfolio breakdowns on this channel, and none of them quite look like this. So what can we see? This portfolio is almost $1 billion, so it's 958 million, and it's made up of around 200 different positions. Remember his first rule, he's never going to own an individual stock over 5%. Now, when we compare this to something like Warren Buffett's, it's a very different picture. And this one looks so much simpler, right? We've got one core position in Apple, and then the next 4, Bank of America, Coca-Cola, American Express, and Kraft Heinz. This all makes up 3/4 of the portfolio. So Warren Buffett definitely chooses less companies that are higher quality. And Mr. O'Leary clearly likes to own a lot of different stocks. I can only imagine how hard it is to manage this portfolio. So let me see if I can break this down and make this simpler for you guys. Okay, so what I've done, I've just kept the top 30 or so, and I've grouped all the rest together into one block. So we can now see some of the individual companies, and it is looking more manageable. However, I can probably make this even simpler for you guys. To help give you guys some actionable steps, this is as simple as we can make it. So what you're looking at now is the top 10 positions, and everything else is grouped together. So now you've got some takeaways of some really good companies that you can do some further analysis on. So the top companies for Kevin O'Leary is Microsoft, then Home Depot, Johnson & Johnson, Procter & Gamble, Alibaba Group, Merck & Co., Amazon, Verizon, Pfizer, and Apple. Clearly all big, established, powerful companies and some great dividend players. Okay, so for fun, let's take a look at some of his most savage moments on Shark Tank.
In the context of the guitar industry, you're a nothing burger still. There is no tomorrow. You're dead to me when you say no to my deal. You're dead. You're gone. I don't even know who you are. You're a vapor.
Thank you, I thank you, but I'll say this.
What are you thanking me for? Opportunity knocked. No one was home. Turn around. Get out of here. I am very worried a very large lightning bolt's going to come down and just bzzz, and you're going to be gone, and there's going to be a bar shaking in the wind out there. It says you're a nothing burger in this market. It's like you can just sit there, huddle around the fire and go, please make it happen. Please, I believe.
And it's going to happen.
In today's market, you should just throw knives at each other. If you actually started to take any market share from the established sock makers, they could crush you like the vampire cockroach you are in 2 seconds. Part of what I have to do every day is to try and find opportunities where I put money in harm's way and I get a return. I don't pick places where there are thousands of dead and rotten corpses. That's what the beverage industry is. It's guys like you getting slaughtered. And look, I don't want to depress you or not give you the motivation you need.
Who are you kidding?
I think it's fraught with risk. I'm out. Wow. Stop right there. I'm going to do you a huge favor. Here's how I think of my money. Soldiers. I send them out to war every day. I want them to take prisoners and come home. So there's more of them. Your army, every soldier dies that you send out every day.
When you have no soldiers, you're wiped out. That's the game of life. Stop this madness. I am so out.
Don't you think a large food manufacturing branded company would crush you like a cockroach? It would be a slaughter fest for an investor. That's
You know
the
what?
problem.
I don't know.
But $4,000 in sales is absolutely nothing. Of course. I'll take you out for dinner and spend more. Now, I've looked at the valuation and I say, are you guys out of your friggin' minds?
Then I'm out, and now that offer is going
You're
to cost me
crazy.
more.
25 times cash flow for a tchotchke company. Are you out of your mind? Robert, I can't watch you kill money that way. Children are going to watch this.
You know, Kevin,
They're
that's the
going to watch
beauty-
you kill money.
That's the beauty of the show.
You're murdering money in front of children. How is it possible that any of these other four sharkettes are going to figure out
Sharkettes.
to do a deal with you where they have to own more than 100%? Nick,
You've studied Amy's
You've really
stuff.
moved me, and I want to read a poem. Okay.
No.
I really want to read a poem, and I've written it for you.
This is
It
such a
doesn't
special
happen very
moment.
often.
Okay.
In cash, I know because I like to watch it flow. When I ask valuation, I want no hesitation. Are you worth $10 million? Hell no.
So there you are, guys. That was a snapshot of the investment portfolio of Shark Tank's Kevin O'Leary. So what can we say about it? Well, he's clearly a big fan of diversification. He loves cash flow and businesses that cash flow. And he also loves his dividend paying stocks. If you recall, he does have 3 investing rules. Number 1, he doesn't have any single position over 5%. Number 2, he doesn't own any sector of the S&P over 20%. And number 3, he likes to means test the balance sheet. So he's looking for companies that cash flow. So there you are, guys. I hope that was helpful for you. Don't forget to check below this video because I've also done the investment portfolios of some big billionaire investors, including Warren Buffett, Ray Dalio, Jack Bogle, so check below for those. Just one favor to ask, if you did find anything useful in the video, be sure to drop a like. That would be much appreciated. If you haven't yet subscribed, be sure to click below and join us. I do have some great videos coming up that you don't want to miss. Any questions or comments, just post them below. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.